ICT, or inner circle trading, is the most popular charting educator going right now. He has a plethora of technical analysis setups that he teaches, but at the basis of almost every single one is his idea of fair value gaps. And I have built an automated indicator on both ThinkorSwim and TradingView that will automatically plot these gaps. In today's video, we're going to go over how they work and a handful of different ways that you can utilize them. But I don't want to steal his thunder, so let's let Mr. ICT explain his fair value gap theory.
And the two little line segments delineating one candle's low and one candle's high. In between those two reference points, we have that big down candle. In the exposed area in between that is the fair value gap that only the sell side liquidity has been offered. There's a range with the candle before it and the candle after it, where it has left a pocket of porous price action or only delivered on the downside. We're going to expect price to eventually want to trade back up into that little gapped area. So this area in here, that's where we're looking to see it fill in. That's the nature of a fair value gap.
So to simplify that explanation of a fair value gap, you get a bullish fair value gap when you are looking at a candle and the high of the previous candle does not overlap with the low of the next candle. Those are the two lines being plotted on the chart. That's the fair value gap that you expect the price to return to and reverse out of. Obviously, vice versa for bearishness. When you're looking at a candle and the low of the previous candle does not overlap with the high of the next candle. Those are the yellow lines plotted on the ThinkorSwim chart here that are signifying this bear value gap that you once again expect the price to trade back up into and reverse out of. Hopping over into the TradingView chart now, but also still looking at the SPY daily, I just want to show off and show examples of both charts since I've created the code for both platforms. I want to talk specifically about this bearish fair value gap that we talked about in the latter half of the previous clip, because this is, I think, a really good example of when ICT likes to use this fair value gap theory. When you actually get a large open bar between the fair value gap, right? Because you're going to see a lot of them painted on here. The fact that the high and lows don't overlap every third bar is very true very often in the stock market. But it's when you get this kind of large flush bar in between that ICT teaches. So once again, you got this low here. You got a large red flush bar, meaning that a lot of sell pressure happened on this day, and you did not get an overlapping high on the next day. That then builds, once again, according to ICT, I'm stealing all of this from Inner Circle Trading, not affiliated with him at all. I don't know him at all, trying my best to help you all understand his theories, and it's my job to build the strategies and studies for you, right? So what I think he's looking for here, since you got this heavy sell side pressure, there is a, for lack of a better word, liquidity gap there, right? There is a gap in shares that still need to be traded, shares that still want to be sold, that just couldn't be sold because the selling pressure was so high. So as the price retraces back up into this, you will notice that the bottom line stops printing. The bottom line stops printing on this indicator that I've created when the gap is broken. It does that here and then gets a pretty nice immediate reversal out of it. You'll notice that same sort of instance here with the most recent bull value gap. Now this one, once again, I wanted to talk about this example first on the SPY daily chart because you got the really nice large open bar flush. This one, not so much. You just got an actual gap on the chart. Although there was a decent, bit of buying pressure in this bar, so maybe not the worst example either, but obviously from this bar's high to this bar's low, not overlapping, fair value gap from the buy side pressure here. When it trades back into it, the indicator stops painting. That's a good way for you to know, hey, this chart has a broken fair value gap, currently trading inside the fair value gap, re-enters that, has had a pretty nice reversal out of it already. All right, let's actually talk about some functionality of the code. You can run this study on any time frame. Right now, we are looking at the daily. So if I open my Pine editor down here, you will see my aggregation. This is set to D. if I wanted to use this on the 5-minute chart, all I would need to do, change that to 5, hit save. Now, if I jump into the 5-minute chart here on TradingView, you will see that the study is painting 5-minute fair value gaps. Now, if I hop over into ThinkorSwim, same thing, but you change it slightly differently. If I come into Edit Studies, I've created the changeable parameters as inputs. So within ThinkorSwim, you just need to click on this cog, and then you can change the aggregation once again to whatever you would like it to be. In this instance, I'll change it to 5 minutes, hit apply and OK. Now, if I hop down to the 5 minutes, you will see the same fair value gaps painting on this chart. Next, there is a second input, which you probably saw. It is a change multiplier. So if you don't necessarily want to see every single time that the previous bar high or low does not overlap with the next bar high or low, you can change this change multiplier variable here. If I delete one of the zeros, you should now see less fair value gaps. That means now that the gap has to be larger in order for it to be painted on the chart. Let's hop back in and let's delete another 0. By default, there is 4 zeros. Maybe it's 3 zeros by default. Bang, let's delete another 0. You now see even less fair value gaps. Do you see what's happening? As I make that number larger, the change required in order to paint becomes larger. There needs to be a larger gap between the previous high and previous low and vice versa in order for the study to automatically paint the lines on your chart. Once again, if we hop over into TradingView, all you would do from here simply with the Pine editor open with the code that you would have copied in, you would just delete one of these zeros, change this variable around. Sorry, I have to hit save, not enter. If I hit save here, you may notice things change. There it goes. It takes a second. Delete another 0, hit save again. You'll notice things change again. But once again, that is something that you would then take and you would be able to change that value around as much as you would like to find what fits your strategies best, right? It's important to have variables like that built into studies that you plan to give to people, as I do to you, so that they can optimize the study for what fits their trading strategies the best. So far, I've only showed off running the study on the same time frame that we are looking at. But just in my couple of days now of working on and looking at this code, I actually think it works better, excuse me, this way. If I remain on the daily chart of SPY here, but jump into the study, I'm gonna push the study up to the weekly. So now you're gonna be seeing weekly fair value gaps, but on the daily chart. And you'll actually get a lot of great examples on SPY. Here's some from the past though. Here's a weekly fair value gap, a bullish one represented by the cyan lines. Re-enters on the daily, you get a really nice reversal out of. Here is a bearish fair value gap. Re-enters, you get a really, really nice reversal out of. You see what I'm looking at here? We're looking at a smaller time frame as a reason to enter a larger time frame's fair value gap. We can do the same thing. If I hop this chart down to the 5 minutes, let me go back to my favorites, 5-minute chart, and I put the fair value gap on something like, let's run an hourly fair value gap. We are now looking at hourly fair value gaps on the 5-minute chart. You can see here's a bullish fair value gap. Broke it, and you got a decent little reversal. Nothing great there. They're not always going to work perfectly, of course. As any indicator, strategy, anything I give you all, I want you to understand, oh my God, every time it enters, it's going to perfectly reverse. Not always. Maybe you got a little bounce, whatever, but not really so much here. Here, though, bearish 1 hour fair value gap. Re-enters on the 5 minutes. You can paint this as a, reason on the smaller time frame to get in. Really, really nice reversal out of. So that's a way so far that I've found using this study works really well. Of course, I want you to take this, test it, prove what works best for your strategies before you use it with real money trading, as always. If you made it this far in the video, you're obviously interested in these codes. Well, lucky for you, if I scroll all the way down to the bottom of my website in this changelog, you will see that I have already added the codes to my site. daytradingstrategies.net. There'll be a link in the top of the description down below. And if you go to sign up right now, I expect there will be a handful of kind of new viewers from the ICT realm viewing this video, if you use coupon code ICT, you're going to get your first month for only $5. I want you guys to get plugged in. I want to begin helping you all out too. So I'm giving a discount that I've never given before. $5. Not only do you get access to the fair value gaps, but there's over 40 other coded scanners, strategies, and indicators on my site. And of course, you can cancel at any time under this My Account tab with a few clicks. So don't feel like you're locked in. Once again, daytradingstrategies.net, link at the top of the description. Click that, go use coupon code ICT, and become a better trader today.
Trading stocks. He talks about trading stocks. It's important for you Americans and other international individuals to learn about stocks.